One of India's largest NBFCs, IIFL Finance, is all set to open a public issue of secured bonds that would be worth about 1,500 crores. I'm joined by CFO of the group IIFL Finance, Mr. Kapish Jain. Thank you so much for joining us.
Thank you. It's my pleasure.
I'd like to start by asking if you'd explain what this raise is about and why are we getting into the public issue now at a time especially.
So this raise, just to give you a quick background on IIFL Finance. IIFL Finance is a retail finance company in diversified products as a group. We had to gold, micro, housing finance, lab, business loans. In aggregate, we have AUM of around 64,000 crore. 95% of this forms in the retail product that I just spoke about. We've been growing at a healthy pace. Our growth this fiscal was around 29% in the retail businesses. Our growth in the last 5 years have been 23%. As an annualized CAGR. In this period, we have seen COVIDs, we have seen liquidity crisis, but even then, we have been able to grow ourselves in a very stable manner. We have a lot of branches expanded to around 4,000 pan India. So we know that there's huge appetite for credit in this market, and we want to tap that space. And therefore, this issue is largely to fund our growth and to take care of any kind of corporate expenses that we have. But largely, it is to fund our growth across all our businesses. Which is the gold business and the SME in the IIFL Finance main company.
Sure. If you could explain the split of this 1,500 crore issue, 300 crore is NCD and 1,200 is a green shoe option.
Correct. So 300 crore is the main issue size, and if there's appetite for further raise, we will look to raise it up to around 1,500 crore. The dynamics and the details across offerings doesn't changes. Whether we get the first 300 or the remaining 1,200. There are multiple options for the investor to go for. He can look for a 24 months instrument, he can look for a 36 month instrument, he can look for a 60-month instrument. The best deal that somebody can get is 9% if he goes for a 60-month paper. Rates have been on the rise over the last 1 year, but now in the recent past, yesterday we saw RBI has held back the rate. Even earlier they held back the rate. We see globally as well, rates are currently on the lookout and they're being held. So we believe that there is a trajectory where rate might just go towards some correction or softening. May not be immediate, but maybe in the next few quarters. We saw some signs of certain banks have reduced either their deposit rate or their MCLRs, which is an indicator that there could be some softening. In the broader market, we've seen some softening in the G6 and corporate bonds as well, which is again an indication. So therefore, anybody who comes in now will be able to lock in a good price for a long term. If you go for a 24-month paper, you have a risk of getting it refinanced, and the refinance can happen at a lower rate if rates soften. But if you got a 5-year paper, then 9% is something that you can lock in over a long period.
Sure. This is particularly at a time, like you said, that RBI yesterday did not change the rates. Fed is sort of going through a similar situation. Globally, we're in the middle of a recession, but India largely remains unaffected. So how is your experience and what was the trigger for this public issue?
So our experience have been very good. Purely if you see fiscal 23, I talked about our growth, but if you're going to do the financial details, we reported our highest profit ever. We reported a profit of 607 crore at a consolidated level, which grew by around 35% from same time last year before minority. Our growth, so therefore our profit number growth was even higher than our overall business growth at 29% that I said for retail, which is an indicator that it's a very robust situation today. Again, big hallmark for any finance company would be its asset quality. Our asset quality suggests that our NPA stands at around 1.8%, which is far lower than what we had same time last year at around 3.1%. So all these elements does suggest that India is well positioned and India need to service the need on the credit, because there are a lot of people who are looking for credit and they are credit hungry. You need to just select your customers well, and basis that make sure that you are fair and transparent in your servicing to them, and be able to then garner the business and grow.
So how do you position yourself in a market that's so crowded already and at a time when people are sort of cautious with their money? So what is it that you would do to lure your customers?
So, our performance speaks for ourselves, right? We are currently rated AA with a stable outlook by CRISIL and ICRA. This rating does suggest that it's a very safe instrument to go for. CRISIL and ICRA are the leading rating agencies in this country. So anybody who comes in would draw that comfort from the rating that reflects the independent rating that comes in. Our performance has shown and consistency of performance for any company is extremely important. We have shown consistency in our performance. Both in terms of top line growth and the profitability numbers. We've been very fair and transparent with our customers. With 4,000 branches, we do operate with a brick and mortar at our branches, so that we reach out to our customers, handhold them. As you go deep into the hinterlands, you realize that the credit requirement is far deeper than what is available. So the competition intensity actually reduces as you go deeper. We have taken that call to go in and reach our customers at those levels to service them. And with repeat customer base, with regular delivery on our performances, we have been able to repose the confidence from all our customers, including the investors who have participated in our bond issuance in the past. This is not our first bond issuance. We have done it a few times in the past as well. We have serviced them. We have made sure that all our liabilities are being taken care of and being addressed on a very timely manner. And there's been no issue anywhere where there been any degree of default or any kind of a delay in any of my servicing. That's a big degree of confidence.
Like you said, you're targeting the hinterlands and the heartland areas. So, what are the challenges that you face when you go to these corners of the country to provide your services rather than big cities?
So, when you go into the corners of the country, infrastructure is still building. Infrastructure is still building. You need to the details on the customer. Many of these customers are new to credit. How are they going to perform will depend over time. But you need to be very selective in picking your customers. So that credit diligence has to be very, very precise, right? As you go deeper, you have some elements where you could have fraud issues, you could have issues of conveyance in our branches as well. Those elements needs to be taken care of very well as well. So all our infrastructure, all our setup, the skill set that we have got with our people makes us to address and identify the right kind of customers whom we can pick and select. And that really makes us enable us to grow in the way we have grown.
Sure. Thank you so much and good luck with your issue. Thank you so much for joining us today.
No problem. Thank you.
If you like the video, do like, comment, share and subscribe.